you need to start trading. How much money you need to start trading. In this video, you will learn what a trading account is, the different types of position sizes that exist, why it is important to trade with the correct position size. In order to trade, you will need to open an account with a broker. The money you deposit with the broker is the capital you will use to trade, often referred to as your trading account. However, there are different position sizes you can choose from, and the size of the position will depend on how much capital you have. Let's look at how this works. When you trade currency, you buy or sell a standard amount of currency. These standard amounts are called lots in the Forex industry. This is very similar to buying a certain amount of shares. You can buy 10, 20, or 100 shares, and you pay the price accordingly. So when you buy or sell currency, you will buy or sell a certain amount of lots. A standard lot is equal to 100,000 units of the base currency. In this case, when you buy a standard lot of euro-dollar, you are buying 100,000 units of the euro with US dollars. This means that one standard lot has a value of $10 per pip when trading major currency pairs. So if the market moves 1 pip in your favor, you make $10. If the trade moves against you by 1 pip, then you will lose $10. This is important because if you do not have sufficient funds, then trading with standard amounts will not be a good choice. Let's say you have $500 to trade with, and you lose 10 pips. By trading standard lots, your loss would be $100. That is 20% of your account lost in a single trade. 20% of your account is too much risk. You would lose your entire trading account in just 5 trades. To trade with standard lots, you need more capital to be able to withstand losing trades. Ideally, this means that you should have at least $10,000 to start with, in order to be able to adhere to money management rules and stick to risking only a maximum of 2% of your account. There are many people who do not have $10,000, and so brokers are able to offer different position sizes for traders with less capital. Brokers have introduced mini-lots, which constitutes 10,000 units of the base currency, and micro-lots, which constitutes just 1,000 units of the base currency. When trading with a mini-lot, each pip is worth $1, and when trading with a micro-lot, each pip is worth 10 cents. So when trading with a micro-lot, if the trade moves 1 pip in your favor, you gain 10 cents. If the trade goes against you by 1 pip, you only lose 10 cents. This means that a loss or win of 10 pips amounts to $1. Therefore, in order to trade with a micro-lot, someone can start trading with as little as $500 or even $150 if the trade has a sufficiently small stop. There are 3 types of position sizes that you can choose from. A standard lot, equal to 100,000 units of currency, where each pip is worth $10. A mini lot, equal to 10,000 units of currency, where each pip is worth $1. And a micro lot, equal to 1,000 units of currency, where each pip is worth 10 cents. Because you should only risk 2% of your account on any one trade, in order to trade with standard lots, you would ideally start with $10,000. To trade mini lots, you should ideally start with $2,000. And if you have less than $5,000, it is advisable to trade with micro lots and start with at least $150. So far, you have learned that you can start trading with a small amount of money. There are different types of lot sizes that you can trade. You choose the lot size depending on how much money you have to start with. To trade with standard lots, you ideally need $10,000. To trade with mini lots, you ideally need $2,000. And to trade with micro lots, you ideally need $150.